HDFC Limited is all set to declare its Q3 FY22 numbers, and we'll take a look at how the numbers look in terms of the street expectations as well as what our ET Now poll seems to suggest. Well, net interest income is expected to grow around 4.5% on a year-on-year basis to come in broadly at that 4,200 crore mark, and that's where PPOP will lie as well, even though that will signify a degrowth of around 3.5% on a year-on-year basis. Now, largely this is due to the dividend income coming through of around 200 crore versus the dividend income of only 2 crore which was there in the same quarter in the last year. Provisions will see a downtick of 10.7% on a year-on-year basis. However, the uptick is sharp when we look at it sequentially. It's expected to go up by around 17.3% sequentially to that 530 crore mark. We do know that HDFC Limited is known to have a little bit of an over provision, a little bit of a conservative mindset with regard to its balance sheet and financials, and that may be the reason why they will over provide in this particular quarter. When we look at the core NIM, that will trend slightly lower, and that is largely due to the excess liquidity of almost 50,000 plus crore on the balance sheet, and that liquidity of course will help HDFC Limited drive growth is the presumption that we are making here. When we look at credit costs, that will trend higher due to the higher provisions. When we look at it on a quarter-on-quarter basis, it will be pretty much flat when we look at it on a year-on-year basis. And AUM growth will see almost 8+ quarters of double-digit growth in AUM for HDFC Limited. Around 12% is what we are projecting to be the AUM growth that is expected to come in around that 620,000 crore mark. 6,20,000 crore broadly is what the AUM number is looking like. A nice 3.5% jump when we look at it sequentially, which is quarter-on-quarter, of course. When we look at what we can expect in terms of management commentary, well, margin trajectory will hold the key. We will see NIMs fall a bit, but obviously, as I did mention, that's largely due to the excess liquidity on the balance sheet. So when we look at how the margin trajectory will be going forward after that growth comes through, one will have to look at what HDFC Limited has to say about that. In terms of asset quality as well, that will be important given the growth coming through. HDFC Limited will want to preserve that asset quality, especially in retail, and how demand, non-individual demand is expected to be muted. But how are they witnessing demand on both sides, non-individuals as well as individuals? That will also be of key importance. Well, the stock has not done much. When I look at the stock trajectory over the last 1 month, in fact, it's down 2.5% over the last month or so. Over the last 6 months, it's gained around 4.4% in the last 6 months. And when I look at it over the last 12 months, it's again down 3.3%. So the stock has not done much when we look at it over the last year or so. And a lot of brokerages and houses have a buy rating. Almost 3,000 plus is what the target price is at, and currently the stock price is around 2,569. A very interesting buying opportunity. 20% plus of gains is what several brokerages are factoring in.